Hello everyone, this is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team to reduce the potential for fraud, compliance fines, and just overall bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Many organizations, and I am sure yours does too, have as a part of their vendor validation process to verify vendors' information against state business registrations, IRS TIN Match records, and in some cases against bank records. Now, if the validations are successful, that information is trusted and payments are made. Fraudsters are now taking advantage of this trust. How? Keep listening. Welcome to episode 395. Your vendor's validations were successful, so why could it still be fraud? So remember in the good old days where fraudsters impersonated an existing person and then they expanded that to impersonating your vendors to try to get you to send them your vendor's legitimate payment. Well, and I won't say that's the good old days because that is definitely still happening. But nowadays, they are doing something new. They know that you are doing those validations when you're onboarding your vendors. They know that you are requiring certain documents and certain information, and you are validating, for example, that IRS TIN Match to make sure that your vendor's legal name matches their tax ID with IRS records. You're even going as far as looking at the state that they're registered in, that the vendor is registered in, and verifying that they are registered and that the address listed on the state registration appears somewhere in the documents that you require, right? Because it could be a mailing address or their office address where you're collecting, in addition to an office address, ordering addresses, other addresses that are in addition to. But as long as you find that main address on the business registration, it's actually one of the only ways that you can really tie an address to a specific vendor. It's not one of the only ways, but it's one of the easiest and free ways. I'm sure there are other databases and other validation resources that will do that. However, again, this one is like easily accessible as long as you know the state that the vendor is registered in. And I recommend, if you don't do that, or you're currently not validating or looking up the vendor state registration, that you add that to your validations. And you may even want to or need to, if you don't currently have it, add the state that they are registered in on your vendor setup form, because a lot of states are not registered in the state that they give you as like their main address. And so you want to make sure that you understand where they are registered in versus the address that they give you. Now, again, it's great. I recommend you add that question to your vendor setup form, but I will also put a link to a site called Open Corporates, and you can search for that vendor's name. And if they find it, then they will identify what state or states, because sometimes it's multiple, the vendors are registered in. So anyway, I do recommend you do that. And it's really good because, again, it will give the address that is tied to the vendor, and you can match that to the address that you, or at least one of the addresses that you were given. And it is a great way to tie that address to the vendor, because you don't have a lot of free resources to do that. And a lot of you have access to verify bank account ownership. So you are validating at a minimum that the bank account holder's name matches the vendor's legal name, that the tax ID used to open up the account or that's on the account is the same tax ID that the vendor gave you, and then also that the address that is on the account actually matches an address that you received from your vendor on your document, on their documents, or the documents that you require. And so, in order to get a divert your vendor's legitimate payment to their, fraudulently owned account or account under their control, the fraudsters would come directly to your team and try to social engineer them into the remit information, be it a remit address for a check payment method or banking details to change where, or the bank account that it is that the payment will be going to. And since teams knew this, we put internal controls, authentication techniques, other vendor validations, best practices in place in order to detect or avoid payment fraud that resulted from these types of fraudulent change requests. But what happens when the validations that you are doing in order to avoid these fraudulent payments as a result of these fraudulent changes? What happens when that information comes back as valid, when the validations are successful? And so that question came up for me when I read an article by JD Supra, and I will link it in the show notes. But the article was called Business Identity Theft: How Corporate Hijacking Works and What to Do. Now, while the article is really meant for the businesses or your vendors and what they need to look out for and how they can detect when a fraudster has kind of stolen their identity, I thought it would be beneficial for the vendor team members to know how the fraudsters are making or being successful with getting these changes into those validation resources, and give you a couple of tips that you can, some steps that you can add to try to avoid or detect that fraud before it turns into a fraudulent payment, even when all three validations, the IRS TIN Match, the state registration, the bank account ownership validation, even when that is, or those validations are successful. So let's start with how the scheme works. And so what I didn't realize is that most states have moved their corporate filings online. Well, I take that back. I did know that because one of the uh, links in the show notes. We'll give you a link to my vendor process training center where you can have access to the resource library. And in that resource library is a list of all states and links to their business entity searches. So I did know they were online, but what I didn't realize is that some of those systems will allow anyone, a user, to request access to an existing entity's record, but that it's not as secure as I thought it was. So, depending on the state, if a fraudster requests access to that company, um, many times it's granted with little more than just the ask or the request itself. Now, yes, there are automated emails that will go out and say that, access was granted, and that could be a, hint and a half or an alert to to your vendor that someone has asked for access. But if they don't act on it, then that means that the fraudster now has access to the vendor's record at the state level. And what can they do when that happens? They can go in and they can change the address. They can change other information on that state registration. And so, what that then will allow them to do with updated state information is they can then take that information or use that state registration to, for example, open up a bank account. So they can change the address, they can change the name, they can add and remove right companies, real officers, add someone that is local. Because keep in mind, a lot of these, and I'm saying keep in mind, but a lot of you guys already know that, fraudsters are not just out of state or out of the US, international, foreign. There are a lot of these fraudsters that are being caught today and that are being sent to prison are stateside. So they're in the US. And so if they have or are able to update this information, then that person can go into a bank and open a bank account with that all that information so that when you check the state level and you do the bank account ownership, you know what? All that information is gonna match. And so the article goes even further to say that the fraudsters will manipulate or get a new EIN, right, for that company's name, or they can misuse the company's existing EIN by trying to change the business address or name with that same EIN. And so that is how they can get the IRS TIN Match, right, to be successful. And, EINs in themselves are free. If they do it online, it takes like, less than 15 minutes. And it can also be issued immediately. Now, I don't know what kind of um, steps or controls that the IRS has to verify that they're legitimate businesses. But that speed, if everything else if there are no other indicators, they can get that EIN number very quickly and is very useful, right, for fraudsters. So again, there you have it, the three validations that you're doing: state registration, IRS TIN match, and bank account ownership have all been successful because the fraudster has been successful at changing the business's information with underlying state, federal records, and then using that to create or to open up a fraudulent bank account. And I say fraudulent bank account because it's being used in a fraudulent way, but in reality, it is a valid bank account. And that's why it'll be successful if you do bank account ownership validation. All right. So that being said, it kind of sounds like, right? How do you validate that the request to change a vendor, and in some cases, right, to add a new vendor, because the fraudsters may go to a new client. You may be their new client to get set up in your vendor master file with that information, with those registrations that they just did. So, how do you protect yourself, your company, and your real vendors from that type of activity? And again, the article does have some great information for how to avoid it, how to look for red flags, what to do if it happens to their company, but they are talking to the vendor. Now, the article does have a small little section, like a key takeaway for AP procurement and vendor teams. They talk about how business identity theft often succeeds, right? Because organizations trust official looking records and documents. And in some cases, because they have changed those underlying records, it is official. And so we do trust it. And fraudsters just exploit that, and that is why they go through the trouble of making those changes and creating those records in cases of like EINs, because they know that we're going to trust that IRS TIN match. They know that we're going to trust the records that are on the state registration. And they know that we're going to trust the fact that the business bank account ownership validation came back as a match and it was successful. And so, what they recommend is strong vendor maintenance controls, callback verification procedures. Everybody always has that confirmation call. They talk about monitoring state registrations and periodic reviews of business records, which is, like you're cleaning your vendor master file, making sure your information is still accurate. And I do agree with those things, but the problem is they don't go into much detail about how to do it. And so let's go into each one. The first one they mentioned was strong vendor maintenance controls. And so there is actually quite a few of those that I have in my framework that's called Authentication Validation Management. I have 30 controls or internal controls just related to the vendor process. And so I can't go over all 30 here, but the biggest controls that I think need to be in place is you need to make sure that you are capturing changes on your own forms. And so this can definitely needs to be a vendor banking form. Don't just accept what they give you on a um, what's the thing called, bank letter, either from the vendor or from the bank letterhead, right? Because those can be forged. I actually had to go get one bank letter from my for my client from the bank, and the representative and I were just like, well, it can all be forged. And so what she said is that many will ask for her card, and so I took her card, but client didn't ask for that, just asked for the banking on banking letterhead. Now, I sent my own vendor banking form that I have as part of the templates that are uh, on my vendor process training center in the AVM, the Authentication Validation Management Vendor Toolkit. I sent my banking on that, but I also sent the letterhead in addition to that, because that's what they asked for. But you really need it to be on your own form, because you need to ask authenticating questions on that form to verify that it's coming from the vendor. And so, if they are changing banking, ask for the existing banking. Yes, I know that maybe they have it because they might be in the vendor system, or they may have pre-texted the vendor's, let's say, AR team, and and received it, which is another reason some of you guys are running into the fact that when you try to do confirmation calls, the vendors have told their applicable team members do not validate banking over the phone, because if you think about it, they don't know who you are either. But what that form does is, by asking authenticating questions like the existing banking, like the team member that the vendor has a relationship with, uh, uh, that allows or is like a deterrent for fraudsters, because you're asking information that maybe no one else is asking. And on the form, also ask other things too, like their tax ID, their remittance address, the contact information. And I ask it, one, again, to deter fraud, because it's, more information that they would have to give another client, for example, that's only asking for banking on letterhead. But I ask that to deter fraud. And then also I ask it to make sure that when you get the form back, you make sure you're, updating the right vendor in the accounting system or ERP, because now you got the EIN and then, or applicable tax ID. Uh, and right, it is a deterrence for fraudsters, because the hope is that they'll look at your form and the fact that you're just not going to accept the banking on vendor or bank letterhead, and they just may abandon the request and go on to another potential victim that's not asking for all those things. And so the biggest thing there is to make sure you have your own forms and you ask authenticating questions, and definitely make one of the authenticating questions the existing banking, make it the internal team member they have a relationship with. And yes, I know they can go to LinkedIn and get any internal team member or get an employee at your company, but that, you know what, they have no idea if you're going to contact them or not. And so it is a deterrence. Ask other information to make sure that when you get that, if they do submit it back in, you can look in the system and verify that that employee exists, that the banking information is correct. So that's one vendor maintenance control. The next thing is that callback verification procedure. That was the second thing that they recommended. With that, I say, you know what, you really need to have with a vendor change, two phone calls. One, the first one, like normal, before you make the change, contact the vendor and verify that the change is valid. And the key is, before you make that call, that first call, check to see if there are any changes to the vendor contact information, because the fraudsters know you're making that call. And so before they send the request to make a change to remittance information, they are going to some will send a request to change contact information. So when you make that call, you'll be contacting them. So make sure that you check the vendor record for any change to contact information, and do not use the new information. Use the existing information, or the information prior to the change, and verify it that way. And I will tell you, I saw an article or a post about how a fraudsters, or fraudsters, they are fraudsters, even though they were, physical. They went into the bank and they tried to withdraw money, impersonating really a consumer. But what the bank teller did is, she initially called the phone number that they had changed, and everything was hunky dory, but something else was suspicious. So the fraudster happily, approved the fact that, yes, I am, that is me trying to make that change. But the second thing is that she called the number before the change. And so the folks that were there were impersonating someone doing a banking activity on behalf of the account holder. And so when they called the old number of the account holder, they found the actual account number and thwarted that fraudulent activity. And so you could do the same thing with your vendors as well, and make sure that there have been no changes to contact information before you make that confirmation call. And then once that's successful and the change in the system is made, there's another confirmation call that is also very important. And so that confirmation call is once the payment goes out the door, you know when the vendor should expect that payment. If it is a same day ACH or wire, you can contact them the same day and verify they received it. Again, use the contact information for that was successful in the first call. It could be the contact information from the prior call or the updated one. And it's probably the updated one if you were able to, if you approved the change and the payment went out. But make that call and verify. Actually, I would call both just in case anything went wrong. Call both numbers and make sure that the vendor received that payment. And again, if it is same day ACH or a wire, you can call them same day. If it's a regular ACH, you can call them within 48 hours. If it's a check, you could probably call them within 7 days. And the key is that you are verifying they received the payment before you have to wait for the vendor to notice that the payment wasn't received. And by that time, it may be too late, maybe out of your vendor's recovery window, because most times, or a lot of times, it's 48 hours, 72 hours. For checks, it's 30 days. It just depends on the bank. One client said her bank didn't have any threshold for recovery of funds. But you do want to make sure that you identify or verify that they received the payment while you're still in the window to recover the funds if for some reason that fraudulent payment got through. So that's what I always stress with these confirmation calls is that when there is a change, you make two calls, one to verify the change, and then two to verify that they received the payment. Now, you don't always have to do that second one if the payment is, smaller amount. You can base it on, the payment amount over a certain threshold. $20, no. 2.7 million, yes. Anywhere in between, you can decide. I had some clients that said, for anyone that has had a bank change, we're going to call, or a remittance change. It could be bank change or remittance address change. We're going to call because we can't afford to lose anything. Others have said, 150,000, 300,000. It just depends on the size of the company. So you decide that, make your two phone calls, and hopefully avoid fraudulent payments or avoid losing the entire fraudulent payment. Now, the next two things that they talk about is monitoring state registrations and periodic reviews of business records. I kind of see that as the same thing, maybe, because I do recommend that you clean your vendor master file every month. And if you can't do it every month, do it every quarter. Clean it once a year really isn't good enough, especially if you don't have continuous monitoring that can alert you of changes to things like watch lists where your vendors may have been added to one since you last onboarded them. You really can't wait a year for that, because if you make payments to vendors on those lists, for example, there can be heavy fines. And so there's quite a few reasons why you want to clean it more often. But one step of that cleaning is validating vendor information. And I like that they talk about monitoring state registrations. However, if you don't have a way to, what do you call that? continuous monitoring, if you don't have a platform that provides like continuous monitoring or that can do the bulk validations or bulk checks of that state information and other business record validations, that's kind of hard to do because if you are doing the lookup by state the way you do it when the vendors are onboarded, or if you have a change, that's a one by one lookup. And that's not really feasible when a lot of you have hundreds, even thousands, tens of thousands of vendors. And so my recommendation is that you do find a resource for either, if not continuous vendor validations, so that they can alert you if something changes, or validations where you can trigger it at a bulk level. And when there are changes, then you need to go back to your vendor and verify that those changes are valid. And if they are changed, again, make sure you have your own form so that you can collect those changes with the information that you need to verify that it is your real vendor. And so have your own vendor setup form. And on that vendor setup form, just like the vendor banking form, ask for existing information. And so if they're making a change to their tax ID, ask for their previous tax ID. If they're making a change to their address, ask for their existing address. Also, keep it static and ask for the internal team member that they have a relationship with. What else? If they are changing contact information, ask for the existing contact information. Don't make it easy for these vendors or fraudsters, I'll say, to uh, change the information on your vendor record in your vendor master file. Now, those were just a minimal amount of changes or recommendations that I have, really kind of based on the recommendations that the article has. Again, the authentication validation management framework includes 30 internal controls, but it also includes 5 authentication techniques. It includes 18 vendor validations, 18 best practices. And when we talk about the authentication techniques, I really didn't even get into, right, authenticating that you are receiving the information from the actual vendor or your internal team member, if that's how you get your vendor documents or, vendor inquiries. I didn't even touch on any of that. And so, if you want more information on it, I am going to leave a link in the show notes. But the uh, evolution of what these fraudsters are doing now in order to convince you to make changes to the vendor record because the information they give you matches right at the state level, at the federal level, bank account ownership level. Uh, you need to have other steps in place in order to avoid payment fraud. So I hope I was successful in making you aware of what the fraudsters are doing now and why your validations, even though they were successful, could still result in payment fraud. And I hope I gave you at least a couple of tips that you can put into place in order to avoid payment fraud. So, thanks everyone. I hope you enjoyed the 395th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.